Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Investments Limited, and as I speak to all of you all this Monday morning at about 9:45, 10, markets opened up on the negative note, but then there is a little bit of recovery. Of course, last week's sell-off was primarily led by the sell-off that we saw in the IT sector because of the growing influence of AI-related tools likes of Anthropic, etc., which will, of course, it's an ever-changing sector. And because of that sell-off in the US IT-related companies, we saw a sell-off, heavy sell-off rather, coming into Indian IT companies. Some of the stocks in the IT sector actually were trading at their 52-week lows, and we saw a lower level in the IT index as well. But then Friday, there was a little bit of stability in the IT sector. And this morning, as we get back to the trade, given the fact that we have broken certain crucial levels, 25,800 that we spoke about last week, we in fact gone below 25 or 25,500. And from this morning, lower levels we recovered, but again, there is marginal single digit downtick on the Nifty as I speak to you at around about 9:45, 10 this morning. So the broad range for the market this week remains in a tight range. Of course, the levels have the lower lows and the lower highs, as we call it, have scaled down with this sell-off that we've seen last week. So the lower end band for the Nifty spot is in the range of 25,300 to 25,400 on the lower side, 25,500 to 25,600 on the higher side. And a decisive breakdown or a breakout could open up levels accordingly as and when we get a closing either below these levels or above these levels. So one has to prepare for choppiness and volatility. Q3 earnings was a decisive curtains down last week, and to sum it up, as we've seen a close of Q3 earnings, the good part was that there was no negative news, and the commentary in verbatim from corporate India for the third quarter gone by and the upcoming fourth quarter next financial year remains to be optimistic with the kind of events which are likely to unfold on the horizon. So, with a view of positivity, I think one should possibly build up their investment strategy accordingly in the market. If you're a trader, use your wisdom and fine sense of judgment and trade accordingly. But if you're an investor, these are great times. On the India VIX, there has been marginal uptick this morning. 13.57 is the level on India VIX with an uptick of 2.11%. On the rupee dollar, well, after seeing some strength last week, a slight weakness, 90.64 rupees to $1 is the level on the currency USD INR, and expect some strength over the week as we go into the trade in the currency market. On the crude oil on the crude oil front, marginal downtick, $67.77 to a barrel is Brent, $62.91 to a barrel is NYMEX. Expect lower levels unless and until some unfortunate event in form of geopolitical escalation by US on Iran. If that happens, then one will have to wait and watch. But both these countries are breathing fire on each other. Testing the patience and stare down is something that has gone to the next level. So one has to just wait and watch and gauge the events unfolding and then take a call in terms of which way the crude oil price is going to move, and of course what is going to be the impact in case if there is any escalation on the higher side. Net FIs off, though last week they bought some, but net sellers, and domestic institutions were net buyers. Only one particular silver lining to this otherwise sell off in the market is the entire BFSI segment, that is public sector bank, private sector bank, and strong NBFCs were holding out a little bit better than compared to the other sectors, and that made a little bit of positivity. So expect an outperformance from the BFSI segment. And of course, not to forget, friends, third quarter earnings for almost by and large some public sector banks, some private sector banks, strong and was very, very good. So BFSI segment remains to be a silver lining in an otherwise little bit of nervous market. So we spoke about investment and we shared investment ideas. So before we do that, a small disclosure that all recommendations that I'll be sharing with you this morning In this video, Geojit Spotlight are a part of our fundamental research team recommendations from a long-term point of view. Our company Geojit, myself, do not have any kind of investment interest, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. So the first investment idea is from auto ancillary or OEM segment, you can call it. It's JK Tire. Third quarter numbers were on all account were much better than what the street estimated, especially our. So it's an outstanding stock for the last couple of time, and this outstanding is going to continue. Expect positivities. So start at current levels. On dips, you can go on adding it. The next one is from an healthcare mid cap stock, Max Healthcare. We've seen the positivities of number. Of course, Narayan Rudalya was a little bit disappointment, but Apollo Hospital, Max, Fortis, all of them delivered good set of numbers. So Max Healthcare. And there's a lot of capex happening in the healthcare sector because of the demand. So either existing capacities are going through capex or they are acquiring newer names, hospitals to increase their presence. So Max Healthcare is the second investment idea. Start at current levels and on dips you can go on adding to it. Mind you, friends, these are long-term ideas. These are not BTST, STBT, 3 months, 6 months, 1 week, 2 days. No, they are long-term, and for that you need to have at least 1.5 year time horizon. And start at current levels. Use a strategy on dips. You can add to it and do a little bit of homework before you eventually decide to invest in this stock.